Hi there, in this video we're going to take a quick look at the difference between currency depreciation and devaluation. Well, the key difference lies in the mechanism by which a currency loses value, in particular the exchange rate system that a country is using. So currency depreciation, well, that happens in a floating exchange rate system. It could be free floating, where market forces determine the currency's value, or it could be managed floating, where there's some central bank intervention. And depreciation happens when the external value of a currency goes down relative to another due to factors such as inflation, maybe trade imbalances, interest rate changes, or just market sentiment, the sentiment of speculative buying and selling. It's a market-driven process. And here's a good example, the pound against the dollar since 2021. Well, during 2021, the pound was depreciating against the dollar. From buying $1.40, it fell as low as $1.12, $1.13. In the autumn of 2022, that was after the aftermath of Liz Truss and Kwasi Kwarteng's ill-fated budget, before picking up value in recent times. So the last 2 or 3 years, the pound has gained ground a little bit down to high interest rates in the UK, and is now trading just above 1.30 to the dollar. So depreciation and appreciation. Whereas devaluation, well, that happens in a fixed or pegged exchange rate system where the government or the central bank operating on its behalf deliberately changes, lowers the currency's official value relative to other currencies. And sometimes we use the phrase a competitive devaluation. What does that mean? It means that it's a deliberate monetary policy tool designed to boost exports, perhaps improve the trade balance, or address other economic issues. So typically, depreciation happens in a floating system. It's driven by market forces. Control is unintentional. Trade and interest rates basically drive the exchange rate. A good example there, the pound depreciating against the dollar and the yen depreciating in 2023. Japan kept very low interest rates, certainly until recently, whilst the US Federal Reserve was increasing their interest rates due to rising inflation. Whereas devaluation happens under fixed or peg systems. It's intentional. It's usually a one-time adjustment, although sometimes you get 2 or 3 devaluations in a row. Good examples recently, the Egyptian government devaluing their currency, and in Argentina they devalued by 18% their peso to align with IMF loan conditions. Here's a good example of devaluation, the Turkish government devaluing the lira against the US dollar. Go back to 2021, you had to sacrifice 8 lira to buy $1. As we head into February 2025, at the time of recording this video, you have to give up 35 or 36 lira to buy $1. So the Turkish lira has been one of the weakest currencies in the world in the last 4 years. So what are the main motivations for devaluation? Well, it's, again, similar to depreciation, it's to help the export sectors, because in theory, a weaker currency makes exports more cheaper in price terms, increasing demand for domestic goods and services as well as exports. China, for example, has historically managed the yuan in a semi-exchange rate, semi-fixed system to maintain their price competitiveness in their main export markets. If a country is facing a currency crisis and they're running out of reserves, devaluation can help to slow capital flight by making foreign currency more expensive to obtain. Good example there would be Venezuela. And if a country has a lot of debt denominated in its own currency, devaluation can reduce the real burden of that debt. However, if you've got a lot of foreign currency denominated debt, then repayment of that debt becomes a lot more expensive with devaluation, and investors will certainly demand higher interest rates if and when the government comes to the capital markets to issue new debt. So there we go. There's the key difference there between currency depreciation and currency devaluation. It's an important distinction to make, and I hope this video helped. Take care and see you soon.